All right, we have Pavel Hala, who is our guest today. I want to welcome him to the Face Show. Pavel, how are you?
Yeah, I'm fine. Nice to meet you, Blake. And what's up with Dale?
He was traveling. He's actually in Chicago this week. He was visiting, well, actually, the list last week. He's visiting a childhood friend, and he's been gone for the last 7 days. I believe he's coming back tomorrow. So he did fill me in that says you do a lot of spreads, intermarket spreads in the market. So tell us a little bit about yourself and how you trade the markets for those of us that are unfamiliar.
Okay, so I personally nowadays trade the markets only sparsely. I focus on equities and options and so on. But historically, I was focused on commodities, and I also have a company, spread charts, that is basically charting analytics focused mostly on commodities, but also on other parts of the market like currencies, indices, and so on. But basically futures, which mostly are commodities, but not just commodities. So I always, because most of your guests probably talk about macro and equities, currencies, forex. So I always talk about commodities because I think they are important. They play important role in today's markets, and they do not have, or most people do not pay enough attention to them. So that's the reason why I will talk about commodities also today.
Okay, well, do you have any charts that you want to show us, or do you want me to navigate? It's up to you.
Yes, I will share the screen, but give me a moment. Here we go. Yes. Do you see
I
my
do.
screen?
Yes.
Move the in here. Okay, so this is actually our software, our analytical platform, the spreadcharts.com. Everybody can sign up and use it in the free version or the premium version. And I prepared a few charts dedicated to mostly to metals because during our two previous interviews with Dale, I was bullish on agricultural commodities, specifically sugar, cotton, and soybean complex like soybean oil and soybean meal. And yes, I was too early. I have to admit that, but these markets are on the move finally. And I think this move will continue, maybe after some kind of consolidation, because the rally over the past few weeks was quite strong. And I think you mentioned intermarket opportunities, and I think there might be one broad intermarket opportunity between these or this part of the market, these agricultural commodities that I think will continue to be strong in the coming weeks and maybe few months, and metals, because I have identified some kind of weakness in the metals, and it also has a lot to do with the dollar because we turned bullish dollar a few weeks ago. And there are two reasons for our bullishness, or just to make it quick. The first one are the divergences in the SOFR spreads, basically interest rate derivatives, interest rate futures between the 1 month and 3 month SOFR futures, and these turned up roughly in the first half of September, and this strength has been sustained. And if you compare that with the dollar index on the first subchart, you can see that eventually the dollar has responded to this strength and turned higher. And there is also a lot of potential fuel to be burned during this uptrend because if you take a look at the positioning in the dollar, the commitments of traders data on dollar
I,
index
but
futures.
by the way, I caught that pun. I got it. I did
Yeah.
giggle. All right.
Yeah, so if you take a look at this data, and I personally prefer to watch the net traders indicator of the large speculators, basically the difference between the number of traders who are predominantly long or short. And this indicator turned negative in August, which means that the dollar market was oversold, undervalued, you can call it whatever you wish. And the second helpful part of the data, of the commitments of traders data, is the small traders, non-reportable traders. They are not important. They are pretty insignificant, but they can serve as a pretty good sentiment gauge because they are often wrong. They're usually wrong. They chase the market, and they also turned net short in August. And this was another confirmation, if you wish, that the dollar is oversold. And given the turnaround in these interest rate futures, we thought that the dollar will rally. And right now, the dollar started rallying. And this will be one of the catalysts, which, in my opinion, will be negative for base metals like copper and maybe also platinum. So let's focus on copper first, because as I said, I expect this is a short-term opportunity, of course, but still, if you play it against the agriculture markets that are strong, I think it can make a great deal of sense. So copper, this I will move this zoom panel. So we have copper here. Here we have copper price chart. This is the first continuous contract for copper. And copper has been in an uptrend since September. It's been quite a strong trend. And now it is consolidating. And normally, after such a pretty important breakout and consolidation, you would say at least the price action implies that this uptrend will continue. After some kind of consolidation, it will break higher again. Yes, that's just the pure price action. However, if you look closer into the market structure, you will find signs of weakness. The first important sign of weakness are the interdelivery spreads on copper. These are copper bull spreads basically across the different parts of the term structure curve. And you can notice the divergence. While the copper price itself is moving sideways, I will zoom it in. While the copper price is moving sideways since roughly the end of September, these spreads are weakening across the curve. It's a clear bearish divergence. And I think, or at least this is the reason why there won't be a break higher, but lower. And that will surprise many people. If you take a look at the positioning, once again, the commitments of traders data, it's not extreme. I wouldn't say that copper market is overbought, but it's also no longer oversold. Especially when you take a look at the net traders indicator, the large speculators. I will close the net positions and focus just on this one. You can see that many large traders piled into copper in a rather short amount of time. I can also zoom out. And yes, there might be some fuel left, but I think it's natural for the market to correct at this point, which means that the price will most likely move lower. So that's another
So can
confirmation.
can I ask a question at this point?
Sure.
I mean, because copper price is obviously one of the big catalysts of this move has been the stimulus measures by China. So do you even, I mean, China's coming off Golden Week. They're going to be back at the markets tomorrow morning
Mm.
in China. Does this have any bearing onto the analysis that you're doing, or do you really care less?
Yes, I do care because you're right that China is important. Basically, half of worldwide copper consumption
Right.
is China. So it's definitely important, not just for construction, but the copper has been used as kind of collateral in the financial systems. I know it's crazy, but that's how it works in China. So it's definitely important. And in this regard, I don't pay much attention to Chinese macroeconomic data because, once again, this data is delayed, like in the US. But unlike in the US, the Chinese data is heavily manipulated. So it doesn't really make much sense to focus on the macroeconomic data. What I do follow are the currency markets. And I have this chart. The top subchart is copper, once again. And on the bottom subchart is the Chinese offshore renminbi, the Chinese currency. It is actually inverted price of USD CNH, which means that when the curve goes up, the Chinese currency is strengthening. When it goes down, then it's weakening. And I think that's pretty clear. And it's been historically well correlated with the copper price. When I zoom out, you can clearly see how the copper followed the Chinese yuan or vice versa, if you wish. So let's zoom in again. And you can see the strength in the Chinese currency since July, which was, by the way, one of the most important catalysts that pushed copper higher, that started this uptrend in copper. And by the way, we were bullish copper back then, and this was the main reason for our bullishness. But if you take a look at the recent price action, you can notice this sharp nosedive in Chinese currency. And that is, by the way, the third confirmation that copper prices will move lower. And I know that there's been a strong stimulus, but this is I think the most relevant data for copper. And remember that uh, the CCP will be eventually forced to make some kind of devaluation of the yuan. And I think the market is discounting that because the logic, in my opinion, is that whenever the Chinese economy was really strong, I mean, fundamentally strong, focused on the periods when it was fundamentally strong, then the Chinese yuan strengthened. There was no need for any action from CCP to do additional stimulus or weaken the yuan. So during these times of strong yuan, these were periods of inherent strength on the Chinese economy, and that inevitably translated into strong copper prices. However, the weakness in the Chinese currency was just a manifestation of the weakness in the Chinese economy. If the Chinese economy was strong, there would be no need to stimulate or devalue the yuan. So for me, the recent stimulus was just a sign of weakness, of desperation, and that will weigh on copper prices in at least in the short term. And the data proves this.
All right, awesome.
Yeah.
That's
So
great. Paul, so what else, what would you say moving forward? You bring up all these different commodities. Which one's like the one that you think traders need to be focused on right now? Like what's the best trade setup that you're seeing in your view?
well, basically, I would focus on commodities that benefit from rising rates because we are currently in a rising rates environment. I have this chart of, I call it rate sensitive proxies,
Hmm.
because here on the subchart, it's just the inverted price of 10-year treasury futures. So you can imagine this to be 10-year treasury yield. Of course, the values are, doesn't make sense, but the curve corresponds roughly to 10-year treasury yield. Below, I have the copper gold ratio, another rate sensitive proxy. And on the bottom subchart, I have the Brent crude oil to gold ratio. All of them are rate sensitive proxies. And both these charts have already turned up. So I would focus on commodities that benefit from rising rates. I still think this is just a counter trend rally that the rates will eventually move even lower. But for the time being, in the coming weeks, maybe a few months, but most likely several weeks, the rates will probably continue to move up. So I would focus on commodities that can benefit from this. And these commodities can be uh, energy and also agricultural commodities. I mentioned cotton, soybean complex, sugar. The only problem was I was really bullish about these commodities last time. It was 3 months ago when I talked with Dale about them. There, as I said at the beginning, they have rallied hard and they are overbought in the short term. So they can be some kind of correction, consolidation, whatever. But if I have to focus on anything, it would be agricultural commodities. And we also have signals in our app. These signals are not human-made. They are produced by complex machine learning model, deep machine learning model, AI, if you wish. And if you look at these signals, you can see that there are many long signals on agricultural commodities like grains, soybean complex, and these commodities. So I would focus on grains. You have canola here, wheat, soybeans. So this is the part of the market I would try to go long, and I would short the metals against these long positions if I have to pick a position. Because as I said, these agricultural commodities are maybe slightly overbought in the very short term.
All right. Well, I appreciate your answer on that. So, Pavel, tell traders what's the easiest way to follow you and follow your work and more information about spread trades or spread charts, excuse me.
No problem. So you can go to open our homepage. You can go to our website, spreadcharts.com. You can also sign up for our software. We have the free version of the app, but also the premium version with some additional features and also research and this access to these machine learning generated signals. We are also active on Twitter or X, if you wish. Our Twitter handle is spreadcharts.com. So you can follow us. There, and maybe you will find our insights valuable, or you will use our software in your analytics. So in our analysis. So that's how you can find more about our software and our company in general.
Great. Well, thank you very much for spending your time with our Face community. I do appreciate it. And folks, make sure you check out spreadcharts.com when you get a chance. And Pavel, thank you very much for making your way over here to the Face show first thing this week. And we do appreciate your insights. It was really refreshing to hear and see your technical viewpoints of the markets.
Yeah, thank you for having me.
My pleasure. All right, traders. Well, my name is Blake Morrow with the Face Show. Again, I don't know if Dale's coming back tonight or tomorrow night, but don't worry, be back here on the Face Show tomorrow. We'll have you covered no matter what. So thank you all for being here with us. Pavel, thanks again for being our guest, and we'll catch you guys tomorrow morning on the Face Show. For those of you that are ForexAnalytix subscribers, we'll see you on the Morning Edge in approximately 23 minutes. Talk to you all then. Thank you very much. Good luck today. Goodbye. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.